Hi everyone. Okay, let's take a look now at this last problem. I'm not going to go into as much depth in this last problem because it's really a repeat of everything that we've done up to this point. So there's just a few things that I do want to point out. So requirement one is going to be, again, the only type of inventory method you have to use in this problem is the LIFO method. So I'm not going to, again, repeat about how to do the LIFO method, just go back to my previous videos where I discussed that. But in this particular problem, we're given a series of transactions that take place from January 2nd through the 31st. And what we're going to have to do, first of all, is to do this inventory method. And we take a look at the different transactions that take place during the month that have to do with any purchases and any costs of goods sold. And we create this table, again, same type of table where we have our purchases, our cost of goods sold, and our inventory on hand. So you're going to have purchases on January 7th, and you're going to have a purchase on January 22nd. And you're going to need to record those purchases just like we did in the other examples. But I do want to point out something very important in the January 7th purchase. It says that they purchased 80 units of software inventory on account for 1,680 plus freight in. So what you're going to have to do is calculate what the unit cost is, and you do that down here for the January 7th purchase. And you do that by taking the total cost divided by the total number of units. But I want to point out and really strongly urge you to know that you need to add in the freight in of $80 for the total cost. So your total cost is going to be 1,680 plus the $80, and then divide that by the total number of units to get your unit cost that you're going to be using up here. So that's for the January 7th. On the January 22nd purchase, it's more straightforward. There's no freight in. So you would just calculate that, taking the total cost divided by the total number of units. The other thing that I do want to point out is that on the 31st, so you're going to have goods sold on the 18th and on the 28th. And also, and it's not very obvious, but you're going to have some on the 31st. And the reason you're going to see some on the 31st is because if you look at the transaction on the 31st, it says that there's a physical count of software inventory of 145 units. So it's telling us that when they did a physical inventory, they came up with 145 units. Well, as you go through your calculation on this table, you're going to see that you're going to have an ending unit previous to that of 160 units. So according to the records here, you're going to find that you have 160 units inventory on hand. But the problem is telling you that when you did a physical count, there is 145 units. So a mistake has been made. There's been shrinkage, so to speak. So down here, you want to calculate what that shrinkage is, the number of units that you're going to need to adjust. So you're going to put in the number per the physical count and then the number per the inventory record. The difference there is the adjustment that is needed, and you're just going to, you would make the assumption that, you know what, actually we sold them, we just never recorded them. So on the 31st, you're going to now record what those units are that were sold, and you're going to use because it's LIFO, you're going to use the last dollar amount of the inventory that came in. Okay, so that's just some things I wanted to point out. Don't forget up here, again to repeat, on January 7th, add in the freight in to the total cost to determine your unit cost. And then on the 31st, you're going to have to account for that inventory, that what they call shrinkage, because our physical count is different than the inventory records, and we're going to make the assumption that we actually sold them but did not record them. Okay? And then what happens in requirements 2 and 3 is we actually do the journal entries that are required from January 2nd down through the 28th. And all the available accounts are going to be here listed on the side. So again, we've done journal entries plenty of times, so just do the journal entries based upon the transactions that took place during those dates. Then you're going to carry these over, and the problem does give you the opening values T accounts. Okay, so those are given to you in the templates. And then you just add in all the transactions that you do in the journal entries, whatever those amounts are. Okay, then you're going to come up with your final balances. And in requirement 4, you're going to then do what's called the adjusting entries. And we've done adjusting entries in week 3. And the adjusting entries are those that are done at the end of the month. So on the 31st of January, you're going to have 4 different adjusting entries that you need to make. And those are listed here. And you do that, you use the accounts that are available for those journal entries here. After you do those adjusting entries, you're then going to go back to the T accounts and add those adjusting entries. For instance, under a salary expense, wherever you see an adjust ADJ means you have to fill in those adjusting entries that you did back in requirement 4. After you fill in those adjusting entries and get new balances, then you're going to do your adjusted trial balance, which we've talked about before. You just carry those balances of each of those counts. Either they will have either a debit balance or a credit balance, never both. Okay, you're always going to have one final balance in those accounts, be it a debit or a credit. You're going to add each of those columns, and again, your debits at the very end should equal your credits. And I will tell you that the amount that is the total amount for your trial balance is $47,671. Now, I tell you that because I want that to be a guide to you. But what I don't want you to do is just put the numbers in there. So, for instance, 47,671 will be your ending debit and credit trial balance. Don't put that in there and then just assume that the numbers that you put in here are correct. Make sure they do add up to that. Because if they don't add up to that, then don't leave these numbers in here. You're going to have to go back and find out what you did wrong. So I have found students in the past, because I give this final number, they just leave it there, but they've made mistakes up here and it doesn't add up to the final total balance. So I just give that to you as a hint so that you know that you're correct. But if you're not correct, go back and find out what it is that you did wrong. Okay, that is it. We've covered all the problems. I think I've told you everything that I feel you need to know in order to get a good head start and know how to work these problems out. Again, always feel free to call me during my office hours at 602-639-7378, or you can reach me through the individual form or question to instructor form. Good luck, guys. This is a tough week. I'm aware of that, and I want to help you as much as I possibly can. Thank you.